This is the Investor Connect podcast program. I'm Hall T. Martin. I'm the host of this show in which we interview angel investors, venture capital, family offices, private equity, and many other investors for early stage and growth companies. I hope you enjoy this episode. Hello, this is Hall Martin with Investor Connect. Today we're here with Denis Coleman of Life Science Angels. Denis, thank you for joining us.
Thank you. It's a pleasure to be here.
Great. So what was your background before investing in early stage companies? What did you do before this?
I started investing in early stage companies in 1990. And before that, I was overeducated. I had 3 degrees from MIT and a Ph.D. from Stanford in business. And I taught for 6 years in Canada and at the University of Hawaii. And I finally did a year at Stanford. And then I launched out into entrepreneurship. And I did the first spelling checker on microcomputers. And then I was a founder of Symantec Corporation. And then since 1990, I've been an angel investor.
Great. Well, tell us more about your angel network there and how you guys work.
So I was a member of a couple of angel groups. And then I had enough deal flow on my own for a few years, but I missed what you get out of an angel group. And then I heard about Life Science Angels that specializes in healthcare and life sciences. And that's all we invest in. And there's about 130 investors. And I was just sort of compatible with these people. Most of them know many things about the technology that I only dream about knowing. And I found it a very good way to get deal flow and people to talk to and due diligence of deals and meet the entrepreneurs.
Great. Is it a geographical group or is it by sector and people are from across the country?
You know, our offices are in Palo Alto, California, but we have about a third of our members from around the country. And we have online software for the deals and Zoom for the meetings. So it's quite possible for people to do it remotely. Although they missed our 5 monthly dinners, it's a major feature.
That's always good to have FaceTime with people there as well. So let's talk about the state of angel investing. How do you see the industry evolving for angel groups? What changes do you see coming up?
Let us talk pre-COVID and post-COVID. We are now in the COVID era. So the rules have all changed in the last 3 weeks or 2 weeks, depending on when it got through to you. Right now, things are just 100% different from what they were a few weeks ago. We have Life Science Angels. We just had a board meeting yesterday to talk about this. And I'm sort of giving you my conclusions, although maybe they're a little bit stronger than the group. And what I look for now in a company is a plan for, after they've raised the amount of money they're asking for, to have a runway of 2 years and a plan for a reduction in force, if necessary, to keep them alive for 2 years. And the valuation is going to be half what it would have been 3 weeks ago. The news is not all that bad because you're not going to be raising as much money. So you're going to be giving up more dilution, but not that much dilution because the valuation's down and the money is run. And, you know, from an investor standpoint, that's the way it looks. There's enough risk in these that if you throw in a COVID risk and how long a COVID risk will last, that just becomes sort of an intolerable risk level. And that's my point of view on this, unfortunately. The question is, what does one do if one already has a startup and it's funded? Well, what we're going to do, we're going to have our portfolio, and we're an angel group where we have LLCs and the people pool their money. So it's not really a portfolio like a fund, but I'll call them the portfolio companies. And instead of emphasizing due diligence meetings for new deals that may well not get funded unless they have gotten realistic about those points I've said, we're going to devote our meeting time, which is now Zoom time, to having our portfolio companies present for maybe 10 minutes. Be sure they can articulate their story. And if they need a little top off or a little more money, then maybe they'll get it from us. We can help them. And in any case, and this goes on, they will be out looking for more money and they'll be prepared for it. So we're sort of warning entrepreneurs here, be careful here. The rules have changed and we need to see entrepreneurs that understand the rules have changed. And those that are coming in with old valuations, it's just not going to be taken that they're serious entrepreneurs. In our portfolio companies, we want them because we want to help them, and that seems to be where our efforts go.
Well, I certainly understand. I saw that in the 2008 financial crisis. I believe you went through the same, where after the crash, valuations were universally down by 20 to 30%. And I always tell my entrepreneurs the same thing. Don't think that the investors are going to take a haircut in the stock market, and you're not. We're all in this together. So, and I think many people understand that.
No, exactly. And those are sort of those who survive and keep it together. It's often, there's some good deals there for investors. And it's like all these angel investments. If they're successful, everybody is successful. And as to who gets 10 or 20 or 30% more or less of the pie, when the pie's big, there's plenty of pie. Now, there also was in the bubble when it burst in 2000, 2001. Oh, for another bubble. I just need one more. What happened there is that anybody who was funded in 2001 that had any sort of a reasonable idea and maybe even no progress on it got funded. So when the bubble burst, not only was there less money, every idea had been worked on. So that was really quite a drought until several years before we saw good deals again. There's lots of good deals out there now, especially in the medical space. We hope we can find some matches in upcoming here. But when people can't go to work, it doesn't make sense to put money in somebody that can't make progress with their company, except at a very favorable price.
I find these COVID times very interesting. I find that some entrepreneurs are actually doing quite well because they were positioned for the COVID economy, so to speak. They're doing telehealth, they're doing distance learning, they're doing remote work, and we now need that more than ever. Do you ever find any of those examples in your group?
We've tread lightly in telehealth because we've made some investments in it, but it's been so hard to get adoption that you have the greatest product and the legal doesn't like it. That some doctor feels he's going to get sued if he uses it. So those are all growth areas now. And I think when we come out of this, we're going to find that those barriers to the telehealth and a lot of the remote work have now gone away, and that's going to be a very productive area. And of course, for us here, people who are developing antibodies and vaccines, that's a hot area. I have a good friend who's world-class epidemiologist, and he says that the National Institute of Health has 800 applications lined up to do something for the novel coronavirus. And he says, even at 20-minute interviews, it takes weeks just to go through the applications.
Wow. Well, it seems like the COVID economy is accelerating what was already underway at some level before. And then the question is after it's over, how much will we go back the old way versus continuing on? Do you think telehealth will continue at the growth pace and forward, or do you think it may drop back when it's over?
Well, I had an early venture in a telemedicine here that worked out terribly. And it was just the resistance of doctors and medical institutions to adopt the technology. And yes, there is some legal risk if you do it. I mean, you are going to miss something. And it doesn't matter that there's 100 people that'll come to the hospital who need attention here that wouldn't get it without sort of the low setup cost of telehealth. And there will be one person who gets the worst because he doesn't get good advice from telehealth. And that meant it just didn't get going. Now, if you flash forward 10 years from that, now you're having medical records in your EMR and emailing back and forth in a secure fashion to make your appointments and to review your results and things seems to me to be fairly standard. I thought 10 years ago that was a complete no-brainer because it is so much more efficient for the medical institution and so much better for the patient. So my feeling is that once people get to use these things, they're going to find, boy, they just love the heck out of them. And for the same reason, it doesn't make a lot of sense for you to go to your doctor for an early screening when you have a cough and a variable temperature and you can't remember things or whatever it is with the COVID-19. I mean, it doesn't make sense to go to your doctor's office, get him sick, and get everybody else sick, whether you have it or not. Well, when this is all done, the same thing applies to the flu and a whole bunch of other things. It just doesn't make sense to go there, to drive there, to park. et cetera, et cetera. So, yeah, I think we're going to come out of this with a much stronger position in how to do these things. And, let's be quite honest here. The medicine is way behind other segments in the use of this technology for many reasons, some good reasons, and some just because of the momentum in the medical system and the way we do it in this country.
Yeah, it seemed like it's a catalyst that's going to drive a lot of change, not just in healthcare, but education, work, and other things as well. It's going to push it to the next level. So appreciate your insight there on the healthcare side of it. So let's talk about your investment thesis for your group. What exactly is your thesis, and what do you look for in companies that are pitching you for funding?
Well, we sort of divided into one into drugs, two into devices, and three into digital. We like companies that are $3 to $6 million valuation coming in. But the fact of the matter is we see more people 5 to 20 coming in. What we see here is, I'm guessing half the companies that apply to us, and we get about one every working day. We get about 250 companies apply each year. What we see is probably half of them have a technology that's been funded by grants and various other processes in university and BARDA and SBIRs, that there's substantial research that's been done on it, and it's being spun out of the universities. And if somebody comes in sort of cold in the medical space with a good idea, we see things that have a lot of progress made.
Yeah, well, that's great. I mean, when you get into FDA like this, you can't use traditional metrics like revenue and traction, et cetera. They have clinical trials, but what do you look at to say this one has momentum, that one doesn't?
We like to see they're solving a big problem, because I don't know how many deals work for angel investors. You probably have a number on that, but I'm guessing the percentage of deals that return positive money is under 25, and those that have the big returns is under 10. So the problem has to be one where there is a market if it works. The entrepreneur has to make some progress with it. So, what is progress with it? Well, if it's just an idea to synthesize something, then that's no good. Does it work in vivo in solution? Does it work ex vivo, which is to say you can sort of now grow some lung tissue and find out how it reacts with the lungs outside of a person's body? Does it work in mice? Does it work in rats? Does it work in dogs? Does it work in non-human primates? Has there been any human trial here? Phase 1, this whole set of things, and depending on how big the market is and where it is, they have to have some progress on that. And just because it works in a mouse doesn't make it worth $20 million. That makes it worth $5 million, and on it goes from there.
So you look at the actual clinical trial progress, and you're giving valuation for each of the steps they go through for that.
And if you got a medical device here, suppose we had one to operate on a heart valve through a catheter with a new technique here that meant valves didn't need to be replaced. And it's one thing to do this in the lab with a cadaver, and it's another thing to do it in a large animal. So if you proved it worked in a large animal, then this is really good.
That's great. That's great. Can you talk about one or two portfolio companies that fit your thesis that are doing well for you?
There is one, Combinati, and Combinati does what's called digital PCR. And the bad news here for when you have cancer here and you have it sequenced to find out what sort of tumor it is and how it should be treated, the bad news is that you basically get the cancer only exists in a small percentage of the cells. And when you chop up all these cells and sequence them and recombine it to get the sequence, it's not necessarily and you multiply it in PCR, it's not necessarily what you're looking for. So there's a technique called digital PCR that basically divides the cells up in all 15,000 little wells here, and you sequence each one of them. And then you get a real indication of what the cancer is and how prevalent it is. Anyway, so this is the device here. I can't remember. It sells for $30,000 to $50,000. And we like that. And we like, this is hardware. This is iron here. And we like the management team. They had some early tests, and this isn't something that goes into somebody. It's a diagnostic, so that makes it a lot easier. and they had good results, and they had a good team. So they were raising money, and they got oversubscribed. And I really like this. They got oversubscribed, and they took all the extra money. They said, the heck with the dilution. These things always take longer and cost more. And in the medical space, you can say that 3 times. So they took more money, and they then raised another round, and they had the same thing. They took more money, and then they're out selling their product very successfully, and the thing's gone up about 4 or 5 times. And, what it came was sort of good business principles and not getting greedy and taking money that was on the table. And they had a nice presentation. All of the presentations we get, it's hard to present. If you get the technical person up there, they will confuse everybody in the room except the specialist in that area. So they have to sort of water it down so people who are acquainted with the technology can understand, and those who aren't acquainted with the technology can sort of get the picture. And I should mention, I would say 1/3 of our members are not heavy with careers in medical technology. They're just investors that like working in this area for whatever reasons.
Well, that's great. It would sound like a big win there for you guys. So on another topic, what excites you right now? I know we're in the COVID economy, so to speak, but in general, what gets you excited today?
I like to see something where somebody's solving the big problems. And one of the big problems that we have now is that we cure diseases. That's what our medical system does. Prevention is not a big part of it. Now, of course, what is prevention? Well, if you can stop people from smoking, that's a hell of a lot of prevention. But we can test and find out that you're pre-diabetic or whatnot, and then start doing drugs for prevention. But we're still sort of in there too late. But what we can now do with the sequencing, with the big data, with the CRISPR, where you can go in and sort of edit the genes in days, not weeks, months, or years. You can go in and you can fix the genes here so people do not get diseases. And I think that's the future of medicine. And in N years, where N is between 40 and 100, that's what medicine will be detection of conditions that are going to arise and preventing them so they don't arise, because in some form they're a disease of the genes, and that stuff can be fixable. And I work with the Gladstone Institutes in San Francisco, and they have world leaders in this. And they just got Jennifer Doudna, the inventor of CRISPR, to set up a lab there. And these guys, with their Nobel Prize winner, have figured out how to reprogram cells. So they can reprogram a skin cell to be a stem cell. And they can now reprogram a stem cell to be a heart cell without being a stem cell. And I think that's the future. And I'm interested in things like that are big.
It sounds like that's going to be big for sure. So let's ask your advice when you see a lot of startups out there. You've been investing for a long time. What's your advice for people investing in startups in this space? What do you tell them to do before they write that first check?
Say goodbye. So you should sort of think of how much money do you want to commit to this, and figure that you're never going to see that money again. And let's say that's X dollars. And then you should invest that X dollars in a minimum of 4 startups, because they're not all going to hit. Matter of fact, most of them are going to miss. And you're not going to get that portfolio effect risk reduction if you don't do several of them. And that's why an angel group is really important, because in our group here, I can't remember what our number is for individual. We have to get $200,000 from among all of us before we'll invest. But you can invest, I don't know whether it's $5,000 or $10,000. So you can invest in several. Where if you're out on your own, you're just not going to get people's attention unless you invest 25 or more. So for people getting started, that means you got one investment, and that just is not a good idea. You should join a group because you need people to talk to. I find it very valuable, and I learned so much from the technical leaders in the various areas in our field. And when you're going after an antibody for COVID, and you're going after a device to embolize tumors, it's totally different people you're talking to, because nobody can understand everything about the area. And I get a lot talking with people who are just good investors. And, they ask me good business questions and reading the characters of the people who are often technical who come in to present. So I guess my advice is join a group, make several investments, and learn from people. And that's sort of part of the whole thing. And that's sort of why you do it here. The people the interesting entrepreneurs you meet. Anyway, for me, that's a big part of it. And when I say, keep an idea of your budget here, what you're going to invest, what I have to do, I have to limit myself. I see so many things I like that I got to say, Dennis, no. You got to keep investing at a reasonable rate here, but don't get too excited one year. Then you won't have as much for next year.
Well, that's good advice. And so on the other side of that table, what do you advise startups to do before they launch their business in this space?
Well, okay, first of all, do a competitive analysis. You see a lot of medical ideas where it's a good idea, but everybody else has a good idea and there's people farther along. And with any entrepreneur, if you want to make a successful pitch and talk to investors, don't look at yourself as selling them something. Look at yourself as doing the due diligence for them so they can invest in your company. So you're going to go in and you're going to make a bunch of claims. Don't make unreasonable claims. So if you have a drug for shrinking tumors in breast cancer, don't say your company is going to solve cancer tumor problem. Talk about the specific thing you're going to do, and then outline who else is doing it, what are the other approaches, and why are you better? What are you doing that somebody else hasn't done? And the answer isn't the great team we have. The answer is, what are you doing that other people aren't doing, and how are you going to protect it? What is the patent situation? What is the IP situation? And if you're doing telemedicine and everything has been patented that I'd ever thought of and more, then be honest about it. We are first mover. We have got some hospitals lined up. We've got some beta tests going, and we are going to get a first mover advantage. Be honest about it.
Well, that's great. There's so much hyperbole and futures that it's hard to tell what's real and what may come. So that's a good advice for sure.
Now, when I listen to a company here, I try and say, well, let me assume everything they tell me is true. And I say, well, would I invest in this if everything they told me was true? And if the answer to that is no, then I can give them some references, but there's no need to talk further. So we're now saying, well, okay, this is what it would take for me to invest. And now let me find out what's true and go backwards and see if we get below that line where I'm going to invest. And as soon as we start moving in reverse at any speed at all, then it goes south very fast. Because then I said, well, if they made this claim and they said they were in this hospital and the hospital loves it, and I could find a line in to call somebody in the hospital and find out that, oh yeah, we took a look at that. Then I say, well, what can I trust out of these people? So is, sort of the basics, be honest, be true, don't exaggerate, and consider that you're doing the due diligence for them, because you're going to be partners with them. And if you've gone in with things that aren't true, that's not good. So I have a friend here who's had very senior positions at some of the toughest companies like Intel. And he says, when he goes into a board meeting, when they say, here's the good news, he says, shut up, tell me the bad news. He says, I can't do anything about the good news. I can help you with the bad news. So develop that sort of relationship where you can go in and you can talk about the bad news and not just present the good news.
Well, that's good coaching for sure. So in the last few minutes that we have here, what else should we cover that we haven't?
Let's see. Well, I guess this COVID is just so much bigger than anything else, but we've covered that pretty well. So as an investor in this space with all of the technology, and you just sort of can't understand it and due diligence here, where do we look for opportunity and how do I find opportunity? And what I do is I look for what I'll call signals. And a signal are other investors that are seriously interested in the company. And this is where the group comes, is when you get to know people in the angel group, you'll get to know who you consider to be a good investor and who to be a bad investor. So you can pick up the signals when a good investor is looking at it. And I hate to say it, but There's some bad investors where they're looking at it, then I sort of think, well, I'm just going to look. I'm just going to look away. Another signal here is if somebody has a hot customer, so who really likes the product. And when entrepreneurs come in, they're giving you self-reported data, which is a dangerous thing. So if you follow up and find a customer that thinks it's the best thing since sliced bread, that really gets me interested. I like to ride waves of when a big wave comes, the good surfers are on it. So when we get into something like digital PCR or monoclonal antibodies that's now applied to infections, I just made an investment in COVID by somebody who has monoclonal antibodies, which is a new area accessible to cancer now applied. So I like to sort of find things where there are waves and applications, traditional markets that have not embraced technology. I stubbed my toe in the telemedicine here, but I still like these things where the technology has not yet taken hold in a market, and it's taken hold in other markets, and there's a chance of growing the market fast. When I look for investments, I like things where I understand from personal experience the importance of the product. The very first thing I did was build a spelling checker for microcomputers back in 1980. Sold like hotcakes. I'm a terrible speller, and I taught for 6 years, and boy, my students made me into a hopeless speller from a terrible speller. I had a bad back for 13 years, all fine now. So I've made a couple of investments in devices to fix people's backs.
Oh, great. Well, it sounds like you've had a good career there investing in startups and have seen the good and the bad and so forth. So how best for listeners to get back in touch with you?
I'm very happy to talk to anybody. It should come through the email. I can give out an email address. It's not my personal email address. It's dcoleman296@gmail.com. DCOLEMAN296@gmail.com.
Right.
Or they can just email you and you can get them in touch with me.
Sure. We'll put those in the show notes. I want to thank you for joining us today and hope to have you back for a follow-up soon.
I'd love to. Well, Hall, we'll title this How to Come Out of the COVID. Now we're there.
Absolutely. I'd love to do this on the other side because we can compare notes as to what we're saying now to what actually happens on the other side. Does it accelerate? Does it fall back? You just got me thinking all the time about what will it look like on the other side for sure. But I think it's going to accelerate a lot of things that will continue even on the other side.
Oh, I agree. For investors and for entrepreneurs, it's like after a forest fire, the trees grow fast.
Absolutely. I'm expecting the Cambrian explosion of startups here when this is over because there's going to be a lot of new things that need to be done, and startups are there to do it for us. So looking forward to that.
There's a lot of people at home who are doing a lot more deep thinking now they got some time.
Good point. It's a lot of germinating of the seeds already. You can just hear the seeds getting ready to pop. Well, thank you so much, and looking forward to talking to you soon, and we'll let you get back to it.
Thank you, Hall. Good luck to everybody, and stay healthy.
You too.
Investor Connect helps investors interested in startup funding. In this podcast series, experienced investors share their experience and advice. You can learn more at investorconnect.org.
Hall T. Martin is the director of Investor Connect, which is a 501c3 nonprofit dedicated to the education of investors for early stage funding. All opinions expressed by Hall and podcast guests are solely their own opinions and do not reflect the opinions of Investor Connect. This podcast is for informational purposes only and should not be relied upon for the basis of investment decisions.